you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a second of your time. Let's go into the charts. Bada bing, bada boom, we go. So it looks like that what we were wanting for so long finally came, which with a bang to the downside, which is now finally occurring down into this consolidated long pool. They went all the way down to that level. Let's adjust this to where they went. They went down to the 400 level, 25,400. So we still have a little bit more to recover, possibly on this liquidity grab to the downside of these consolidated longs of 41 days of longs to the left here. And it looks, after failing the 0.5 level of the diagonal pitch fan level, we went right to the 382 level here, and we are chilling just beneath the 382 level on this 3-day time frame. Let's go into the high block capital to check out the heat map. What is the heat map? Well, it's when people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see who gets burnt to a crisp and where those crispy points are in the charts. So let's go into the 1-day time frame. So we still have we were talking about this drop to the downside at 26.95, and it just slowly bled into these longs down below and eventually opened the trap door to this external pool below. So as it stands currently, we are now looking at all of these shorts that have opened, we have over 16 billion imbalance in short liquidity on the 1 minute time frame. So what you would be looking for is some sort of reclamation of the 100x characters. You have $163 million at 26,134 that they could come back to just as easily. You have a 50x pool of 135 up at 26,375. Most realistically, whoa, what happened there? Okay, most realistically, you're going to come back to, it looks like they already hit this 100x pool with this spike up, this V-shaped, came to reclaim all of these 100x that opened up into the drop. Not a good look. So if you take a look at where we could go, it's all compressed here. Let me try to get this a little bit cleaner. Let's get a little bit more into the frame. All right, so within this drop to the downside, you have some pools of 225 million at 26,601. You have another partner in crime at 26,877 of 50x shorts. You have a bunch of 200 million bubbles, 178 million bubbles, 178 million bubbles all along this path in these candles to the downside. So this is what a fair value gap recovery is about. They go back in to recover these pools to get them to close their shorts without any profit. So now that they've created that imbalance to the upside, they start to reclaim the short imbalances here. So we have to expand our vision now to the higher time frames to see what that means. So let's go into that chart. Skipping the 12-hour and going into the 7-day, you will see that they came into these pools below. This imbalance was not present on the 7-day because we targeted the external liquidity pools. What do we mean by external and internal? Well, the internal is within the range of the time frame we were looking, which was the 1 minute. As you expand your vision to the upside on these time frames, you will start to see that these external pools have a different narrative than the internal pools, and this is where you start to tap into external liquidity. So there is a narrative here on the monthly time frame with some double digits down here at 24.5 and so on if they decide to keep continuing lower. As you expand into the 3-month time frame, this is what we've been talking about for weeks now, is the $150 billion down at 25.6 and 25.4 and 25.2. You still have 58 billion down at 25.2 for the taking. If we do create a W formation, the first leg of the W could create an extended W down to grab some more and spawn some divergence off of that. Is this the end of the downside path, or are we heading down into bearish territory of the 22.5? There was some SEC attack on Binance, if you will, trying to bring a court case against them. I don't follow it well, but you know, they used news as a catalyst to move where they're going to move anyway. The whole Silicon Valley Bank FUD was back here before we surged out. So I don't necessarily trust news as far as I can change the channel on it. So yeah, let's see if this reclamation of these 100 billion does spawn some divergence to start making a path to the upside. If you took the short, congratulations on you are in order. Let's continue as we expand our vision to the higher time frame. 6-month time frame also suggests if you start making lower lows here and closing out candles on higher time frames within this lower low structure, then you are starting to target down, potentially down to 22.5 to see this 100 billion reclaimed at 22.5, and the entire way is caked up with double digits as well, suggesting that path could continue. Now that we've made a move in one direction with a fervor, that could suggest we continue lower. Okay, so if you're in the short, congratulations. If you're considering going long, look for divergence. Here on the yearly time frame, as you start to reclaim some of these pools, like if we were to come down to 25.2 and get this $15 billion off the table, then perhaps that spawns enough divergence to start making a narrative to the upside. In similar fashion here in March 10th, you had this 19K hit to the 618 of this impulse, and then we had the Silicon Valley Bank collapse and we surged up. So news ebbs and flows, and it flows in the favor and against your favor, and perhaps this is just the catalyzing move to make the attack to the downside, and then something else occurs which surges it to the upside just as fast. So we need to go into a time frame with a pool that makes justifiable sense. So the monthly time frame, if we go into this really quick, we don't really have so many pools above as we have just knocked them out. And you still have these digits of double digits below possibly coming into fruition. If we go into the 7-day time frame, let's see if we can get those to appear. Not quite. So this is where the 1 minute time frame will tell you where those major positions opened and what they're trying to create in trying to grab these 112 million, for example, here. Okay, so time to go into our oscillators on the Binance chart. Okay, so let's go ahead and turn these things on, heads up display on, and we are going to put on our oscillators. What is this? This is Momentum Master, link in the description for more. Scroll down to features, toggle all the components with the toggle switches, or look at each component in its glory. So we're going to look at the 3-day time frame first, as that closed in conjunction with the daily here. So we had a 3-day close just a moment ago, and we closed into this zone. So this zone is now, looks like they wicked down to this almost the region here. So this is pretty much gone on the Binance chart. So I'll go ahead and delete this actually. We nearly wicked off the 1382 of the bearish trend-based fib extension level. This is why using bearish and bullish trend-based fib levels are good, because we did talk about if you cannot get above this 236 on this impulse retrace idea, if you cannot get above 27,213, then there is no reason to be bullish. And sure enough, that did not come to pass. So coming to the downside here on the Binance chart. So if we look at the oscillators B, we have the money flow dipping into a green position of oversold on the money flow index, and the RSI is deviating from that. So this suggests a scooping of the money to potentially come back into fruition here. You are getting a potential double bottom in the green with the Williams as well. The 3-day does suggest some sort of upside play coming in the next few candles, so 6 to 9 days on this 3-day time frame. If you look at the 5-day, no real change in that, since it takes a long time to shift it. If we look at the daily, we had a red vector candle step up to the plate and dump a huge amount of volume out onto the table with that SEC news. We did have a cross down event now confirmed on the daily time frame. This cross up event and the baselines were negated with a fury there on that dump of the volume here. We broke this impulse level, so this is now negated. We broke this potential bullish trend-based fib extension level by not closing a candle above it, so it's now negated. Currently, we are now resting on the 200 weighted moving average. Why do I use weighted and not simple? Well, weighted are stickier to price and tend to show you areas where you will try to find support more often than not. Similarly, we had that idea here, where it bounced off the weighted moving average and we were gone from that point. Are we going to see a similar behavior here? I have no idea. But one thing we can do here is we can draw another impulse from wick to wick here and see where that 618 will put us down at 23,981. So if we come lower and try to find a 618 bounce in similar fashion, we did a impulse to impulse here with the 618 bounce at that 19,580 region. Okay, so technically we could do it from this range here if we want to be conservative, or we take it to the tippy top. Let's do that instead. So 23,934 is the 618 for that region. It puts you between the 1618 and the 2, the Hail Mary play for those bearish trend-based fib levels. We still have potentially bounced off the 1382 level. This is your golden pocket we previously had lined up for you. Okay, so the daily time frame is now fully open in a downwards momentum path. Can this be staved off? You did get the cross down event on the daily MACD about 2 days ago, I believe, back here on that indecision doji that we closed at, that falling shooting star. So the daily time frame, you had the bearish divergence on the money flow as well from back here as per this crystal, and you started to see this money flow back out. If we go to lower time frames of the 22 and see if there's anything we can glean off of that, we are getting a full reset of the 22. Williams now coming down into a region which is noteworthy for a potential long idea. Normally you'd like to see it curve out and have double bottom effect before you think about it, and then maybe get that rising sun. So just holding tight for that potential cross up on the baselines here. In similar fashion, we had a cross up and it played out. So are we going to see that? We have a long ways to go for the baselines to come scoop up the price action. So it's not yet in that sweet spot on the 22 just yet. I would expect it to come down a little bit more. You might come up into a region here on the fair value gap. We'll get into that in a moment. Let me delete this level really quick, and this one, this will stay on the table. These will stay on the table till they're reclaimed. And let's take a look at the 12-hour time frame. We're at the bottom of the Keltner channels, which is generally a good point to find for a somewhat bouncing upwards path. We did come outside of it too, which you could see some sort of bounce up to recover the vectors here. What does it mean by recovering the vectors? Well, it means coming back for some of this liquidity, this 16 billion imbalance in shorts that is now sitting there after taking out all of those longs. So as it reclaims that external liquidity imbalance, it starts to come back into some of these levels. It looks like they're most stacked up at the 26,387 region. So we'll go ahead and 26,375. Let's go ahead and mark that off real quick. 26,375. 375 would put you at that's close enough, and it puts you about there. So that generally is about your 50% level of the vector. You can recover about 50% and then come back down. So would you come back up into here to recover it and then create some double bottom of sorts? Generally, if you were going to long anything, you would try to get it on the second double bottom idea for that juicy percentile out of there. Granted, you could take the single leg up and take that for whatever it's worth, but it will give you a little bit more chop than the intentional double, the second leg out. So Could you take this as a scalp play? Perhaps, but it is riskier than this one, the double bottom. So looking for the double bottom is more a decent play, if you will. So you got everything starting to get into the oversold, all oscillators starting to get into the oversold status. Williams as well, yet has a little bit more room to potentially come down like this into the green on the 12-hour time frame. Looking at the 6, you are also getting the MACD starting to come into the Williams domain to say what's up to the Williams. The Williams is in the oversold status. You're getting a dark purple expressing all of these oscillators stacking in oversold. The weighted background will tell you when these things get oversold and overbought in multiple manners. It will stack them in confluence as they all reach that overbought, oversold. It will give you that color, weighted background color. So as you see, there's 4 or 5 things in oversold position, 6 time frames to be exact, and so you would receive this alert to your phone in the earlier mornings now. So if this 6-hour candle or a higher time frame candle can close with these 6 hours, 6 time frames oversold, then it shows the elasticity of a potential V-shaped up idea. In similar fashion, you had 5 time frames oversold on a 6-hour time frame that got locked in here, and that suggested the elasticity rubber band you back up. So it hasn't closed on these 2 candles here for whatever reason, and so it could continue further down is what it implies. Now if you go to the other lower time frames like the 4-hour, maybe it closed on a 4-hour time frame, and we could see how that's faring as well. So the 4-hour time frame also has locked in a 5 time frames oversold here, and you are getting the Williams in a nice position alongside the MACD coming down into the Williams domain here, everything getting in this nice position with the money flow and the RSI at values of oversold. With the stochastic RSI, you could see a 4-hour play to the recovery zone of this fair value gap, potentially speaking. Money flow, the Williams is MACD is still crossed down though, could come down some more on the 4-hour time frame. If we start to go to the hourly here, hourly starting to get that oversold status with the MACD beneath the Williams saying, come on now, let's get some action going, possibly coming up with the cross up event on the hourly. You are getting the hourly cross up event on the baselines here. What are the baselines? Well, they are your first sign of reversal. Baselines are one of the few leading moving average formulas you will find on the market. So this is the leading moving average formula that is saying there's a potential hourly play inbound. Just in similar fashion, when you had the cross down event up here, this led you to believe that you were having more downside, and you did have this potential cross up only to be immediately negated thereafter. So do you get these fake outs on the hourly time frame? You sure do, which is why you look to other time frames on the higher time frame and what those cross ups and baselines are doing. And until you get these baselines on the higher time frame, like the 4-hour and the 6-hour and the 12-hour scooping up price nicely, it could just be the beginnings of a further downside play. So ideally you want to see this kind of crossing up in similar fashion here on a 4-hour time frame in conjunction with the hourly 15 and all these other ones. So if you get these 4-hour plays, you get more poised for something like this, where you get an 8% move. Are you at that position here on the 4-hour? Not just yet, so I'm not so interested yet in a long idea. If you were to come up here and get rejected, or even come up halfway even to here and get rejected, you know, and just kind of play around here, by the time you get to this region, then the baselines will ideally have met you halfway and kind of come up behind the price like that and scoop it like an ice cream scoop. So the angle you get is kind of like this, where it kind of comes beneath it in this like curved out manner beneath the candles like this. And then when you get the cross up with the candles price action above the cross, then that's a good sign for that reversal. So are we at that point on the 4 hour? We are not. So I'm not interested in a long just yet. But you will see the potential rise up to reclaim some of this liquidity on the upside for sure. How far up before you get rejected? Does it go up to this baseline and get rejected? That could be the case on the 15 hourly struggle that is occurring right now. So if we go to the 15-minute and start to go into the minutia here, you are getting that cross up event. The baseline's held nicely as you started to go up for a percentile of 1.84. You broke the bearish trend, super trend here, but meeting with heavy resistance on this cloud here, attempting to shift this cloud value. Once again, this coincides with the narrative structure of this reclamation of that $150 billion in external liquidity, and now trying to bounce into some of these pools. The 25,985 region seems to be a area of interest where it starts to taper off there on the liquidity here. So the 25,985, 26K to round it off nicely could be a potential zone, if you will, at least for the interim, to reclaim some of this liquidity up in here. So until you can build these narratives on these smaller time frames and start to see it reclaim the cloud and then kind of build its way up in there, and this cloud start to shift in a manner where it thins out and creates your confirmation idea, then it's not real. Similarly, we were talking about that back here. We were talking about the drop and reset of the hourly yesterday, and we talked about a reclamation and the thinning of the cloud, and we could not make it above this super trend level. We just simply couldn't. So everything here was just a fake out breakout idea, and we basically continued to the downside. So until you can get above this and do the similar thing, it's not going to be a real genuine move. It's just a recovery of the vector to potentially go even lower. So the 15-minute time frame is showing you had previous bearish divergence that's trying to chill out here against the cloud, that's trying to come back to the RSI here, getting a Williams cross event potential that could reset you on the 15-minute time frame. You could get pinned or surge up some more. It is not a guarantee, but it is a noteworthy level to watch out for. So if you're in this scalp, it would be better to reconsider your entry and in profit, and or sit on the sidelines neutrally to wait for that divergence to occur. Let's go see if there's any divergence plays on the radar for the higher time frames that we can see potential bounce at from that reclamation level that we came to. Let's go to the daily time frame, look for some divergence, and then we'll bid you adieu. Chances are, let's see. So we previously had some divergence on the RSI here that did play out. We like to keep our pivots tight on divergence so that we're not having a pipe dream. That's why the look back on these are very tight. They don't go back in time too far. And this is why you saw the money flow divergence here start to play out. So are we going to see some divergence? That is the question here. So we got a value here and a value there. There is slight class C, but it's still downward angle, downward angle. The angles are not exactly the same, so you did reset some of the RSI, but you came down significantly in price action there on the daily. Same thing with the money flow, the level in which you came down here on the money flow, but you didn't come as much on price action is interesting to note. Not divergence by yet though. One interesting thing is that we are going down in the price action, but the money flow is coming up here. So are you getting a disguise of some player entering on the weekly time frame here with this volume insertion here? This is incongruent with that. You are also getting Class C bullish divergence on the money flow here. Starting to see the money flow shift back in actually on the weekly time frame, which is interesting to note on the money flow index. The pivots don't line up, so it's not printing the crystal, but the basically from here to here, this lower low, and you're making basically a Class C on the money flow. So that's kind of interesting on the weekly time frame. The week has just begun. We are now at Tuesday. Monday was false move Monday to the downside. Is Tuesday, Wednesday a continuation of that false move play to the downside, or are we going to see that begin to reverse for Tuesday, Wednesday, with Thursday be midweek reversal? This is a bloody move to the downside, so I suggest seeing how it consolidates for a double bottom first and foremost. If you're in the short, you are still potentially safe to chill based on the news play that dropped with Binance being sued by the SEC. Let's go see what's going on the 5 minute. My son was homesick for the last 2 days, so been taking care of him with my wife. Let's see what's going on. How's everyone doing out there? Let's see. Burnt to a crisp. Much love and respect. Yo, what's up, Brett Moore? All right. Okay, so on this 1 minute time frame, let's see what they're aiming at exactly here. So there's a lot of long scared to enter. There's not so many big bubbles here that they're coming back for. If they are going down to break this range level to come to the 25.2, then it would be the external pools that they are aiming at. What are those pools? Well, let's go look at those in detail. So you have the $60 billion at 25.2, and you have 39 billion at 25 even, 50 billion at 24.8, 49 billion 24.6, 57 billion 24.4, and 60 billion at 24.2, and then begins to taper at 24K. So everything down to 24K essentially could be up for grabs for the interim. So if they break down below this is not the internal pools they could be aiming at. There's clearly nothing there of value for them to take. So if they do come lower, they could be coming to attack those external pools. There are some in a drawdown that opened as this dumped that are down here as well. So you have some $139 million characters down here with their partners in crime. Let me just zoom in to see this. Yeah, so you got some 50x characters down here that are in a lost. So it all depends if they are going to get the external pools lower or not. It is a hop, skip, and a jump down below to get that 25.2 and finish off that nice pool. If you go to the 6 month, you'll see that 25.2 is even thicker. $84 billion down there on the 6 month time frame. So you got about 60 billion at 24.9, 81 billion 24.6, and 98 billion 24.3 on the 6 month time frame. So these external pools are mighty juicy, and it gets to 50 billion at 24 even. So once again, tapers at 24K. So we could be going to those regions, so it doesn't hurt to observe and see where Asia takes us. So Asia does like to pump into a dump, and then you dump and pass off to London to see how they play the ball. Similar to this, we had this pump into a dump, and then London consolidated, New York sent it to the downside. Let's make that a little bit cleaner. Where was that? This was 376, so let's move this over. Whoops. I just don't like the arrow being so big, so I'm gonna make this smaller. Three, 7, 6, 7, 4, I think it was, but I couldn't get it perfect. So you got those pools up above that could warrant a stab personally. As you always see on this cloud, when you have this thickness, you meet with resistance. If you don't pierce through it, you meet with resistance and reset as it curves and thins out. Now, if it continues to thin and curve out in a manner as such, then you start to see price action kind of come down beneath it, and then eventually like break through and retest and continue. So what you'd want to see on the 15-minute time frame is something like that around London session at 5 or something like that, and you'd create this kind of double bottom out of here, triple bottom-esque idea, and you'd want to see this higher low start to form. So potentially come back, create the double bottom, create the lower low, the higher low, and then you start to aim at these pools. So that's where we are calculating for an idea. And that's about it. I finally got the account live for the NASDAQ futures, so I will be doing that tonight. I took care of my son last night, so I missed out, but got family first. So let's see how everyone is doing, and we will bid you adieu at that point. The indicator is Cosmos. Danny, do you think a lot of crypto money went into the stocks for the current run-up? This indicator is Cosmos. Thanks, in a very good way, nice. Went to the tech stocks? Well, I think the tech went to the tech stocks. Like, you have a lot of bullish news for tech these days. You know, you have ChatGPT and AI and Nvidia and Apple and all these companies doing well, and with the chip ban to China and the Chips for America Act, and just bullish news in general for the tech sector. And you know, it's not a surprise that it went up in the manners that it did. So there's nothing really, there's been nothing but pretty much bad news for crypto since FTX. The only good news that happened was the Silicon Valley Bank collapse, and it wasn't even good news, it was bad news for the legacy system. So the only good news for crypto is bad news for the legacy sector these days. So yeah, the meme coin things to me don't help. You know, if crypto wants to be legitimized, they got to let go of that whole like meme stuff and think about the intrinsic value of things. not just like, gains in the moment like a slot machine or a casino. That turned me off a lot. I took some of my money off the exchange at that point personally and started to focus just on NASDAQ. So I know how I felt. I felt a little bit jaded by crypto recently, and then just Bitcoin has been going sideways too. It's like people are kind of bored at the range trading aspect of it, unless you're off full time and can scalp and you're a scalper. But even if you're a scalper, it's not as volume based in its movement as the NASDAQ. It trades like Asian session in the NASDAQ futures. So if I go into the NASDAQ futures, for example, I could show you the volatility that just exists there. So we sniped this bottom here at the 300 level and then took that up for like 70 points. It's just, there's more, and it plays to levels too. Like traditional TA does work, even though it looks chaotic here. Like it's playing into these golden pocket levels, and it went down below that, yes, but these bounces do occur, and it came back a third time. So these ideas do play out on these highly volatile stocks trades, and there's just more volume in a 5-minute candle of the NASDAQ contains more volume than Bitcoin in a single day. So the Asian session, this like 5-minute play of straight the upside momentum, like each one of these points, like if you were from this wick to here, that's 82 ticks, and if you have a micro contract, that's $2.50 times 82. It's pretty good. That's like over $200. And if you have a mini, that's $25 times 82, so that's a fair amount of money as well. So if you decide to do the higher leverage version, like you have to be in and out, because even these small dips down will have you kind of experiencing a trailing drawdown on your account, which you don't want to have. So you sell off into momentum and you look for re-entry, ideally speaking. But even this is a very slow progression on the Asian time frame, which still has more action than Bitcoin most times. So the NASDAQ futures, if you're interested in trading, it's not a bad thing to think about. It does do these double bottom plays out of here, and you get the crossover events at the bottom of the Keltner channel with the volume and bullish divergence on the money flow and the rising sun events. Like all of the things within the Momentum Master Suite do occur, which is why we have a growing number of people getting funded inside the Discord. I think that, and they're badasses too. And then you meet with resistance on these adaptive moving averages and at the top of the Keltner channel, and you consider paying yourself there on that time frame. And you look at the cloud health and the super trend, like everything kind of plays a factor. Thankfully it all translates nicely because the volume is nice. The indicator was created with high volume assets in mind, which is why I don't do micro caps so much. So the higher the volume, the more accurate the indicator will become. So that's why I enjoy this now more than Bitcoin. So, well, that's about it. Yeah, that's not true. A lot of good news for crypto this year. Agree 100% about that. Yeah, I mean, it's never gonna kill it. I don't think that crypto's dead or anything like that. I just think that the crypto news could be a little bit more adult, or like the way in which there was a path that it was heading when I first got into it with the whole gaming coins and the metaverse and everything. It was going in a direction where people wanted to get into projects with value, And yes, there was a slot machine aspect to it where people were trying to 100x their money, but with the intention of an actual company like Gala or whatever, Mano or Sand or whatever the asset may be. But then at some point in the FTX, Luna, whatever, like people were trading lunacy, and it was absolute lunacy that they were trading lunacy because it was a total cash grab and it had no value, and the whole thing was just falling apart. And I was like, why are you trading it? And it's like, well, that's where the money is. And it's like people would just trade it because that's where the volume was or whatever. But it started to turn into this, the trading aspect of crypto started to turn into this like meme in and of itself, because it was like, you're trading what exactly? You're just trading the waves, I guess. And I guess you're doing that with NASDAQ too. Like what is this? It's just this probability waves of all these assets, but it's basically 100, I think it's like 100 companies like Apple and Nvidia and everything like that. And so as their values increase, this value increases. So there is some sort of intrinsic reason why this goes up and goes down, which makes more sense than a coin like Wojak or Pepe, you know. Pepe going up or down has no rhyme or reason to it other than the exchange is, you know, manipulating it. And yeah, while all of this is kind of manipulated in some way, shape, or form, it's kind of like a mockery of the fact that it is manipulated through and through. So, but yeah, you're reaching the top of this thing as it starts to cross down, and then that's where you start to consider getting out of the trade. Top of at the adaptive moving average here. So that's about it for, we're going to see where BTC goes from this point. I'm going to keep this idea out here in terms of coming down for a double bottom event, perhaps. There is no liquidity to suggest that on this smaller 1 minute time frame. If you do come down to this double bottom, like you could do an extended W to get to that 20-25-2 region. If you maintain this level in a fashion here or so, like within the ranges here, then you're basically going to bounce up and start to shift that cloud on the 15. So you'd be looking at the 15-minute cloud and how we interact with that cloud, and you are getting that 6 time frames oversold here. So if there's ever a time to think about like positioning yourself up for a long, if you believe in the efficacy of Bitcoin and all that stuff, then it's starting to appear as we eat into these external pools, because as the external pools get kind of gobbled up, the divergence will spawn. Where does it start? It starts on these lower time frames, so you'd be looking for divergence to appear. We are getting a slight divergence on the 15-minute starting to play out here. How high does it take you? You got the bearish divergence starting to play out here on the money flow. So I see ourselves going sideways at least till the London session, where the cloud could potentially thin out and send us up to these pools. And that's my story, and I'm sticking to it. So I thank you once again. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and I will catch you on the flip side. Peace.